Certainly, we've seen explosive growth in this asset class. Today, we estimate it's about 1.6, 1.7 trillion dollar, and estimated to grow about 15% per year for the next 4 years to about 2.5 trillion plus. And so explosive growth from the roots of the asset class, which really started back in the 90s. I mean, we at Goldman, we started raising our first private credit fund back in 1996. In particular, in the last decades, we've seen an acceleration of the growth. It's become an asset class. It's become very much mainstream for a number of reasons. Number one, post the GFC, we have seen more pressure on the banks, pressure to hold on their balance sheet. And so we've seen a slow retrenchment of the banks. And I would say the financing, in particular when it came to private equity deals, was really the realm of banks back in the 90s. Number two, the LPs have found the solution to be very attractive, very compelling, right? It's an asset class that has proven to be pretty resilient to all macroeconomic challenges, so very much all weather. It has produced premium returns versus public fixed income. And we've seen also the advent of vehicles that suit the needs of these allocators and LPs all around the world. Commingled funds, but also SMAs, managed accounts, increasingly some open-ended semi-liquid vehicles. So you got that on one hand. And then on the borrower side, on the private equity side as well, it's become very much of an accepted solution, given a lot of benefits that we may get into.
You mentioned that the size of this asset class is around $1.7 trillion. Where do you see it settling in the next 3 years? What's the outlook of this asset class for this year and for 2025?
Well, it's hard to pinpoint exactly the size because there's opacity here in terms of the data.
Preqin, they estimate $2.3 trillion by 2027.
I've seen those.
Yeah.
I would say probably
Let's talk about the outlook.
Yeah, the outlook is positive here. I mean, we're dealing with a very large underlying market, and we're dealing with a solution, call it direct lending or private credit, which is very attractive to the borrowers. Why? Because it provides certainty, flexibility, confidentiality, speed of execution. It's very tailored to the needs of the borrower. And so for that reason, it's a solution that is winning. Right? Yeah. It ebbs and flows, the growth of it also very much depend on the strengths of the syndicated market, where the conduit are the banks. But I think the direction of travel is very clear. It's growing, we estimate, and I've seen those estimates, 2.5, 2.7 trillion by 2028. We'll see what the macro throws at us, but it's very clear that it's on an upward trajectory.
What is one trend you see emerging in private credit that concerns investors? And is there this interest in private credit now because of only the high interest rate environment?
So when we speak to investors all around the world, I would say in the last couple of years, a key question on their minds, really top of their mind, is in this rate environment, how are the borrowers coping with debt that is pretty expensive, having gone from 0 to 4, 5%. So that is a question that is top of mind. The way that we answer it with our LPs, it's really down to the quality of the underwriting, right? It's really choosing companies that we think can sustain this type of rate environment and cost of debt, choosing companies that operate in stable and defensive sectors and are very cash flow generative. And if we look at stepping back at our global portfolio today, it's been very resilient to that particular concern. To your second question about, is this a moment in time? We don't think it is.
Is it like attractive now because of the high interest rates?
It is more attractive.
More attractive.
Now, especially in 2022, 2023, I would say, having done this for almost 25 years, probably these were the highest yields or most attractive yields that I've seen. But we've been doing it for 30 years. It is an attractive asset class in almost all market environments. Some of them will be more attractive, like we've just been through, and still
Don't you think there's too much focus on sponsored lending? Does this concern you a bit or no?
No, it doesn't concern us. I would say the private equity community today is a lot more experienced in owning businesses and transforming businesses than it was 2 decades ago.
But there's a lot of dry powder in private equity. And there's a bit of difficulties in raising capital, isn't there? Doesn't this do a challenge for you to lend as Goldman Sachs?
Not really, because we don't need a change of control between one owner to another owner for us to deploy capital. Right, and I would say that's also the strength of private credit. You can deploy capital like we did in 2022, 2023, despite M&A being very low, at a 10-year low, we still deployed by refinancing capital structures. These capital structures have maturity that need to be taken care of. These companies usually are very acquisitive, right? And so they tend to buy smaller competitors, and we can provide capital to do so.